Welcome to part 3, guys. I'm really excited for this one. We're going to go through candlesticks. It's so exciting. I'm so excited to do this. I just was at golf and I thought, you know what? I cannot wait to get home to go do that. Um, it's the most boring part of trading, in my opinion. Not many people use it. Like, not many people look at it, but it's so okay. Jokes aside, very important to understand what a candlestick is and what a candlestick does. So on my screen right now, you can see we have a lot of candlesticks here. This is going to be your cheat sheet, okay? And it's going to sound a bit cringe, but when I was younger, okay, when I was learning how to trade, this was my wallpaper on my phone. So every time I pulled up my phone, I'd do it for tests. I used to do it for, I don't know if you guys did this, but I did it on my lesson rota. Is that how you call it? Like a schedule. All right, so you got science at A block B at fucking 9 a.m. in the morning, first class, second class. So I used to have that on my phone. And then when I started getting into trading, I was like, well, I learned a lot from that. So why don't I put it as my phone wallpaper? And I did. And it worked out because look at me now. So we're going to be looking at this cheat sheet. I want you guys to revise this a lot. We're not going to go through every single one of them because we don't need to. It's not necessary. However, it is very important to understand what a candlestick is. Okay. So I'm just going to get rid of this for now. Let me just check gold because I'm in a gold trade. Ooh, that's not good. We're going to come off gold at that point. I'm in a short. Oh god. Okay, right. What was he gonna do? Oh yeah, candlestick. So a candlestick, of course, is a body and wicks. Okay, so we're gonna highlight this out. This is just gonna be your bog standard candlestick. Okay, we're just gonna go. Oh, was it? Oh yeah, it was a candlestick. Oh yeah, you guys probably haven't noticed, but I've changed to black charts just because it's getting that kind of it's getting a lot darker earlier. Do you know what I'm saying? So I don't want like light screens in my face all the time. So I just switched to black screens because it just makes sense. Sounds um yeah, candlestick, guys. So this is going to be your body. Okay, this is going to be your body of your candlestick, and this is going to be your wicks. So yeah, like a candlestick. Like imagine a candle, right? Let me draw a candle out for you guys, right? You guys see this? So you have saw my pen out, 2 6. This pen's not so good. So you have by the base of the candlestick, the actual candlestick, right? Just do a little circle there. And then you have like your flame, right? So on and so forth, right? That is a normal candlestick. You know, like what the fuck is okay? We're gonna cut that bit out. Oh, for fuck's sake! I'm seeing that on the camera. You understand what I'm saying, bro? Like, bro, let me pull one up. Oh, that is so embarrassing. I genuinely. Oh my god. Here we go. This is what I was trying to fucking draw. So you got your candlestick body and then the wick, right? That's basically all right. The whole segment was pointless. It makes sense, okay? If you guys don't know what a candlestick is, imagine an actual candlestick. That's why they're called candlesticks. So it's got the wick. So imagine the wick is the top of the candlestick, and then you got the body of the candlestick, and then so for some reason you've got a wick at the bottom as well. So, but these are so important. So these are all important. But how do they work? So we need to think. This is the opening price. Okay, let's dial in now, guys. All right, jokes aside. Opening price. So this is going to be the opening price. At this level, so I want you to ignore this, and I want you to ignore this, and I want you to think that this is where the stock is right now, the Forex pair. This is the opening price, right? And it's going to go up, or it's going to go down, okay? And when it goes up, it doesn't create a candlestick, right? It's just a body until it goes down, okay? So on and so forth. So if for example, we opened here, it ran up to here, and then came down, the highest point is going to be highlighted there. But the body is back down here. So what's going to happen? There's going to be a wick. That's what causes the wick, right? So it's basically the level the market ran to and then where the body came down to. So this for us is going to be the highest price. So this is going to be the highest price. So the top of the wick is the highest price the candlestick come to. Okay. This is the open price, the bottom of the body, or the start of the body. And then the open price is going to be, this body is going to be the closing price. Closing price. Okay, so that's the closing price. So we have our open price, move up all to the way to this high, came down a little bit, it created this wick, and then this is going to be a closing price, right? And then let's say, for example, we forget all that, and let's say, for example, it went down, so it came all the way down here, okay, and then went up a bit more, okay? We then get given a wick like so, okay? And then this is going to be, again, our closing price, so where the bottom of the body of the candlestick closed, and then this is going to be our lowest price. And it didn't close at that lowest price. It went to that lowest price, but then came back up and closed here. And that's what we get given a body, right? And then let's say, for example, as this opened up, it did go up, right? And then came all the way back down here. Guess what? You get given another wick with the highest price, like here. So we'll come here and here. So you get the highest price there. And that's what creates this candle, right? You can see it in real time. If we go into like a daily, and we go replay, like here, I'm sure if we slow it down, we can actually see it happening. I'm not sure if we can actually. Okay, so this analyze this candlestick here. So the market opened up here. So the market closed here. So this is the closing price of the previous candlestick. It opened up at the close. So it always the next candlestick always opens up at the previous candlestick's close. So it closed here. So the candlestick started here. It went all the way down here and then come all the way back up to the opening price. So that is going to be our lowest point. Okay. And then it went all the way up to this level and then came back down. And it actually stopped at the open price. So it gave us this cross. So it just looks like a cross, right? So it went all the way down to this lowest point, went all the way to this highest point, come down and came back up to this opening price. Next candle. Okay. So this candlestick, of course, opened up at the close at the previous candlestick's closing price. Get rid of this. It ran all the way up to here and then came down and then actually went below the previous candlestick's closing price. So it went below. That's why it goes white for me. It went down. Okay. Okay, we're all good. Went down, came to this level, and then it closed here. So now it closes here. So it's where the body closes. And the next candlestick opened up here, went down a bit, so on and so forth, right? You get the idea. Candlesticks are very hard. They are very, very hard. That's why I was so excited to do this class. But that's basically a candlestick. We have a body and we have two wicks, but the story is very important. And this is why we're going to bring on this cheat sheet. If I can pull it up, 2 seconds. If you guys give me 2 seconds, I'll pull it up. I want to find that good one I had. Yeah, I found it. Right, we're still recording. Bam. Right. So we have tweezer bottoms, bearish engulfing, 3 black crows, bearish engulfing, 3 white soldiers, gravestone doji, tweezer tops, etc. Right. But what do these mean? So let's go through tweezer bottoms first. So tweezer bottoms are going to be either no, they're both very bullish, right? And the way I like to explain it is that, say for example, let's draw this out. So we have this box here, and we have this here. We're first going to identify the opening price. So the opening price is the flattest part of the body, or you have to do it with context, but well, you don't really, because if it doesn't have a wick, that means this is the opening price because it didn't go up to that level, then come back down to the opening price. So this is the opening price. Okay, the market actually ran all the way down to here. Okay, then ran all the way back up and stopped here and give us this hammer-looking tweezer, right? So that's telling us that it tried to push down, but the buyers pushed it all the way back up here, and that's telling us potentially that's quite bullish. Why is it bullish? Because buyers stepped in. So it sold off, sold off, sold off, and then buyers came back and pushed it back up, right? There's number one done. You get the gist of it. Bearish engulfing. So engulfing the previous candlestick, like so, okay? So basically, we have a buy on this example. So we have a buy candlestick here, and then we have a sell candlestick after, and it's engulfed the range. So it's engulfed the previous candlestick. It's bigger than the previous candlestick, and that's telling us it's quite aggressive. You know, if you have a bearish engulfing, so you have a bullish candlestick and then a bearish one is an indicator that a lot of sellers have just stepped in and they're very strong and aggressive. Simple. 3 black crows, we don't. It's just a trend. We don't need to know that. Bullish I don't know why that says bearish engulfing again. That's bullish engulfing. So bullish engulfing. Previous candlestick's quite small, and then the candlestick after that engulfs it bullishly, so it buys above it, right? So it's very bullish. So it's just basically engulfed the previous candlestick, telling us the buyers have come in and they're aggressive. Gravestone doji. This is one of my favorites. So let's have a look at a candlestick like so. So what's happened is, imagine this is a candlestick that's opened up here. So we had a previous candlestick here that finished around here. This candlestick's opened up and gone all the way up to this high, and you think, wow, that's a bullish engulfing, right? That's a really strong green candlestick. But then all of a sudden, the sellers step in and they push it all the way back down, like so, back down to the opening price, and what's left? A wick like so. And that is going to call us our bearish engulfing. So I like to see a wick as like where it was, not where it finished. So it went to here and it finished here. So it tried this high and failed it. So that's telling us that this wick is telling us a story that it's failed it. But I need you guys to remember that it's only important, okay, the candlestick is only important once it closes, because it might do this in the first 30 seconds of a 1 minute candlestick, and then the next 30 seconds it goes all the way back up to the top, okay? So wait until the candlestick closes for confirmation. Another thing is when we are trading stuff like this, and if you're in a trade, very good to see candlesticks like this. Let's have a look at gold, right? I'm scared. Fucking hell, I thought that was a 5 minute then. Oh, jeez. Bro. Oh, it's because the replay's on. That isn't looking good, though. It's fine. I think I'm still in. I don't know. Where is my stop? I don't know. I'll fucking figure it out at the end of the lesson. So, okay, we've sorted that out. We sorted that out. Where is my chart gone? Was it on gold? Okay, it's fine. We can just get it back up. Yeah. So you basically want to see that candlestick on a trend. So you want to see it in the trade you're in. So currently now I'm looking, and there's no real bearish intention. So this candlestick did sell off a little bit. So it went all the way up to here. Okay, so this is the high point. Okay, so it went up to that high point and then came back down. So that's telling me slightly it's a bit bearish. And then of course now it's trying to push back up. We're coming back to these levels. We've kind of got like this supply zone, whatnot. Previous level they have failed above, and then now it's retesting, so on and so forth for it. But we don't need to go into any of that. We need to go into this. So that is going to be like kind of confirming as we go along. Tweezer tops, I guess. It's going to be very similar to a gravestone. So basically, we have a candlestick that opened up here, ran all the way to this high, came all the way back down, and left a wick like this. Okay, very bearish, very not good. I don't know what that is. I don't know what these are. I never learned them. Oh, a doji. This is one of my favorites. So opening price here. Okay, market ran up to here, and then the market ran all the way down to here, but both ended back at the opening price. So nothing. It's a nothing candlestick. It could be an indicator of a reversal. It could be an indicator of indecision. You need other context on the trade to determine if that philosophy or that idea is true. But for now, us looking at a gravestone, not gravestone, a doji, just a normal doji, for us, it's neutral. Okay, it doesn't mean buyers are in control. It doesn't mean sellers are in control. It means they're quite on a neutral playing field. Think about it, tug of war, right? We're playing tug of war, and the candlestick is tug of war. You're on one end, I'm on the other end, and I'm pulling it. I'm pulling it. I'm pulling it. I might pull you all the way over to here, okay, but you pull me all the way back to the starting point, and then I fail, right? And the trail that I leave from the point I went to the point I started at is going to be the wick. Okay, it's a good way of thinking about it. Morningstar, we don't trade them. Pearson, don't trade. Evening Star, it's a doji at the top of a move, but again, contextual. This we don't trade. And then Dragonfly doji is just going to be the opposite to a gravestone doji. So it's going to be basically where the market opened up here, okay, ran all the way down here, and as it ran all the way down here, guess what happened? Buyer stepped in, so it pushed it all the way back to its opening price, but what did it leave? It left a trail. It's like a snail. You know when a snail like walks across and it leaves a trail? Imagine that in the stock market. Imagine that in the Forex market. It's telling us it's going somewhere. It failed to go there, and it's left a trail. It's kind of like, yeah, like if a snail goes somewhere, right? and then it goes somewhere and then comes back, and it's like, well, actually, like it leaves that area. That's telling us that that area may be dangerous, right? There might be bad insects over there. There might be bad, animals, whatnot. So that's telling us that the snails left that area. So you look at that trail, okay, that wick that it's left, and maybe that area is not where you want to go, and that's because it's pushed it away. And that's like sellers trying to step in, sellers trying to step in. They find a bunch of buyers, then buyers scare them away back, and it leaves that trail. You know what I'm saying? Trying to give you guys different ideas about this, but let's look through some examples. Let's go look at gold because I am a little bit nervous about it. I can't lie. Yeah, I think we're all good. I think I've covered this high. I think. Yeah, I definitely covered that high. I would not have covered. I would have not covered that high. I think. Um, don't need to worry about it now. Yeah, my risk to rewards there is fine. It's just annoying. I was up like fucking 3 bags earlier, and now it's just reversed on me, but it happens. Dragonfly Doji here. Let's highlight it for us, guys. Let's tell the magnet. This candlestick here. This candlestick here. Let's use a circle because that's shit that is. This candlestick, right? What's this telling us? Let's imitate it. So the candlestick opened here. Okay, so this was the previous closing candlestick's price. Opened up here. Started out, went all the way down here. Okay, came all the way back up, left a trail, went up a little bit, and then came back down to the closing price. So the candlestick now looks like this because it's left its trail. But what is important is where the candlestick ended. Okay, so it actually ended a little bit below the opening price. So say the opening price is here, ran all the way down to here, came all the way back up to here, and then actually came back below slightly of the closing price. So now we can get rid of that. That's an easy way. And as you can see, it's a bullish indication because it's telling us that it sold off, and buyers stepped in and pushed it away, pushed it back up to where it needed to be. And then guess what? The market carried on. This is where it becomes a bit of an anomaly. Okay, this is why I've always said it comes with anything in trading and has to contain context, right? So that candlestick down here, yeah, they're different colors, right? The exact same candlestick is at the top of this uptrend. Okay, like so. Okay, at the top of this uptrend, but we sold off. Why, Cree? Well, why would buyers step in for then it to sell off? I don't know. Is the answer. I don't know, okay? Because you need a lot of context in things. Maybe news dropped at that time. Maybe this happened. Maybe that. Whatever happened, there's a reason for that. There's a reason for everything, okay? Here we go. Really, really bullish candlesticks here. Okay, really bullish candlestick here. We have a nice tweezer bottom. So we have a nice push up from that candlestick. Another dragonfly doji. We do have a gravestone doji here, which indicated a lot of sellers stepping into the market. Had a neutral candlestick here, and then we sold off, is what I caught. But again, I don't have TradingView Premium because I did pay for it. But we have a neutral candlestick here. We have a dragonfly here. We have. Let's look up here. We have potential bullish engulfings here, so bigger candlesticks than the other candlesticks. Bullish engulfing here, dragonfly here. Gold is probably not the best example because it's just been running. Let's have a look at USD CAD. Bearish engulfing here, which potentially caused that downtrend again. Hindsight warrior. Yeah, look at that. That is big selling pressure. So this candlestick went all the way up to here, then sold all the way back down to its opening price, and then the market sold off. Okay, so that's a really good indication the sellers are in control there. We have a bullish engulfing here, nice dragonfly here, then a push up. Okay, now we're retracing a little bit. Price action is telling us right now that it's strong pushing down until further notice, in my opinion. Okay, that's why you need to look at candlesticks. Where are they moving to? Why are they moving there? Etc. Etc. Right, guys, this is just a quick, short session on candlesticks. We're going to go through it more. Okay, we're going to go through everything a lot more. Supply and demand. We're going to go through support and resistance a lot more. Price action, everything. I just want this to be, I guess, something for you guys to learn tonight and for the rest of the week. Until the next video, hope you enjoyed it, and I will definitely see you in the next one.